Okay, guys, welcome to part 3 here. We're going to finish up with this tick chart template, putting these pieces together, and then we'll roll into part 4, where we'll look at some time-based combinations, and we'll go through working with our manual back tester, which I think would be really valuable for you guys in terms of trying to get clarity in terms of what are the requirements for you to enter the market, right? So we'll get there in part 4. But let's finish up putting together a tick chart template here, because we've had quite a few people that are trading tick charts, and we've had more than a few write us about the market structure, and all of the demos that we did were with time-based here. So I thought I would kind of share some of this with those of our customers that are tick chart traders. I will keep both open during the course of the day. There's pros and cons to each, right? And again, I have the luxury of plenty of screen real estate and all the indicators, but we're trying to, again, that's the idea of the leasing, is to give you guys as close to that experience as you can, so that you can find the right combination for yourself. That's the whole point of the leasing program, so that you get the combo that suits your trading style. And it's not a process of try it, then you got a bunch of indicators you're not using. I think we've all probably been through too much of that. So anyway, as we sit here now, coming back to it now, it's so we're coming up on 130 again. We've had this raging downtrend here, and to finish out the pieces here. So as we discussed earlier here, I've got the devil bands on, and then I've got a 55 McGinley in the center, but there's also a center line here. So I've got a 3 and a 4 ATR. Wadatar, I've added the TDI, the Traders Dynamic Index. This is our version of it. This is it's been popular for years. It's essentially a very sophisticated RSI. It's an RSI with Bollinger Bands and a signal line. So but you see some nice examples here. I would tell you this has become one of my favorites, particularly when you're down on the 1 minute or an approximation or a 512 tick. It's very sensitive, very responsive, and I would tell you, if you're demoing this, which I think you can put this whole thing together. Cumulative delta, you can get that for $25. The TDI, $29 here. The devil bands, $39 here. Those are. So you see the idea. I wanted you to have the opportunity to put a template like this together without having to spend $1,000 on it and say, okay, does this suit me? Okay, if it does, then well, you can just let it play out for a few months, and you'll own it all. And if you got 2 months into it and said, it's not, I don't like it, then you could swap it out, right? That's the point. Okay, so with this little combination here, which I think is an effective one, this is my tick chart template here. Based on the current selection that we have amongst the indicators here. So this is one that I use a lot, that I like. But there's some pieces of it here that I would want to add to, because there's a little bit of mystery, for lack of a better term, that I prefer to see. So what I can't see is what's happening at the moment here. So I've got the little arrow here. This is decision time. Because a couple of things have happened here. We've come all the way back up to this supply zone here. Here's the midpoint of that supply zone. I've got wicks that have gone through. To break and have that supply zone come off the chart, we have to have a close above. Right? So wicks will not do it. It's the same with our measured move, right? With the golden zones, right? So there's got to be a close on the other side, because it's not uncommon to see a wick go through. So you can actually see what happened here. And now, of course, I know in hindsight, right? It's always in hindsight. When you're sitting right there, it still would not be unreasonable to be looking on the sell side. So number one, if nothing else, okay, let's look at the conditions here. Well, we've just tagged 3 times the ATR. We're at a supply zone. We're at a 50 and a golden zone. The RSI, we've got nice and very clear divergence here. Very clear divergence in the RSI, right? I mean, that's a beautiful example of it, why the Bollinger Bands kind of give you an additional view as to the strength and divergence. And then I've put in a pivot. It looks like a peak high on the cum delta, and now I'm just starting to see some sellers come in and be aggressive. Now, but note that with the WADA, it's going to lag a little bit. We don't even actually get into trend until we're confirmed. We're on the other side of the McGinley River before we start to show signs of trend. So you have to recognize that with the WADA. I wouldn't want to take a short here unless I had a red bar. Right, so that might be part of that decision matrix. So do I pull the trigger here? Do I not? Do I wait? Because one thought here with the little wicks, that it might have been, oh, well, let's see if we get a bounce at the McGinley River, and then we come back, and then I can get another shot at it. Well, in this case, we go all the way down well, so look, we go from coast to coast. To 3 ATR, we go to 4 ATR. Note, we tick them. Well, and then where's the bounce back? McGinley, right? So do you see? Look how consistent this is, right? So from here we bounce McGinley. Here we don't get a new low, McGinley. Now we wrestle inside of it. We get to the other side. Now where's the bounce back? McGinley. We get to the other side of it. Now we get to 3 ATR. We pause inside bar. Now we keep going. Now as we retrace, where do we go? McGinley, right to 55 McGinley. And then it rolls over again. It's just it is a very consistent kind of a. I always think of it as kind of back to base camp, for lack of a better way. It's home base, right? Oh, okay, we made it back to McGinley. Now a decision: are we going to get on the other side and go towards the upper side of the ATR bands, or are we going to roll over again? Right? You just see it over and over and over again. I haven't got any more. Here, right to the McGinley. Right? It's a very common if you're measuring the ATR bands and. You know, again, this is pretty extreme volatility. So 3-4 times the ATR is a good range. Now, if it was breaking outside of that consistently, I'd switch to 4-5. If it was not getting to the outside, I'd switch to 2-3. Depends on the volatility in the day. That's the flexibility of bands like that. But let me come back here because this is really a tricky location here. So let me take off all the things that we have here. So we've come up now. If you took the short here and your stop was one tick on the other side of that pivot, well, you may very well have been stopped. Or if you took a scalp here, you probably get your scalps out. I mean, if I'm running a 2-lot here and if I was doing a 2-lot, my first target is 9 ticks, right? Which is common for a scalp, right? You're trying to get a little more than 2 points. So I'd look for that first scalp, and then the way my ATM is, once I get 9 ticks, then it'll go to -6. If I get to 12 ticks, then it'll go to scratch. So I'm reducing risk. So here, scalp would have been out, and then likely scratch or small loser here on the kickback here because the ATM would have brought it close enough. So then the question becomes well, do you want to go again? Well, first question is you got to be prepared to go again. Well, I'm probably not telling you anything you don't know, but with that kind of price action here, and then starting to come out of it, you have two choices. Either you try and get on board here, or as I was just showing, you're hoping that you're going to get another shot at it, right, to get in. Well, in this case, you don't, but you do right here. So now when it gets right here, so let's look at both of these sections here because it's a long-winded way of where I'm trying to get. What I can't see here is I can't see what's happening intra-bar. I can't see at that moment in time. Now, granted, right, I have the benefit of these indicators, and it's close to okay, what's actually happening, who's in control would be the cum delta, right? So I'm going to see who was the aggressor in that bar. So I got a couple of choices here. Let's see if I can do it a couple of different ways. If you are familiar with tick charts, let's bring this up here. Or pardon me, with a footprint chart, 1338. Yeah, there it is here. So here's that pivot right here. So as we double top, we get a slightly higher high here, and then we see the delta flips, and we get 3 bars of negative delta. We actually have a signal. The D here is a negative delta flip. Now, some of you may look at that and go, "Oh God, well, I don't want to have to deal with that." Others might look at that and go, "Holy shit! Look, I can see inside the candle." So this would be another option, right? If you want to put kind of dabble with working with footprint charts, at least you don't have to buy several $100s of an indicator to determine whether or not this is going to add value to you. If you spend time studying it, it would be hard for this not to add value. It's not a panacea, right? There's plenty of opportunity here for you to lose money working with a footprint chart, but it can add value, particularly when I can see trap traders, right? That's where I think some of the real value is. But if I were now, I've just come into that double top up here, and if I start to roll over, the benefit of having this up above is I can see intra-bar, so I can see the aggressors now starting to come in. I see all of the imbalances here highlighted in red, and then I get stacked imbalance here, which it actually shows on the other chart, and here I'll show you in a second. But that would be one choice. So if I pull this over here. So this pivot here is this pivot here, right? So as we start to come out of this, right? Well, it's now granted, right? I mean, all you would have seen is right there. Okay, well, we've just come to VWAP. right? So that will be telling there's likely there would be a reaction there, right, as there is. So here, that this candle right here is this candle right here. Right, so not uncommon for there to be a little reaction at VWAP. So now, do we carry on, right? What's next, right? Another bar, and then there's the break, and then I have a stacked imbalance here, so I can see right here. This is aggressive selling, and right, it just carries on. So again, it might be something for you to lease and see if you're going to have to spend some time studying it and watching it and see how the market responds there, and what if you get comfortable reading that. Again, that's the idea, so you can try something without having to spend a few $100s on it and determine whether I don't like it. We give you a few options as to how you can get insight into what that footprint chart is giving you with a candlestick chart. So this is where I'm trying to get to. Let me show you that, because this would be incomplete. I want more, because I know I can see more. I want more here. This would be an incomplete picture for me. So if I were working with this template, if I would have, as I do, I have another monitor just above me here, I would have the footprint chart. I'd be watching there, saying, oh, okay, what's happening there? But if you didn't, for whatever reason, you didn't want to pursue working with footprint charts, you didn't think it was going to add any value, you didn't like it, or it was just too confusing, well, there's other ways to approach that, because really what we want to see here is at the moment we're in that bar and we're looking, saying, well, if I was going to be a seller, this would be an ideal time to do it. Is there enough confirmation here with lagging indicators? Even though they may lag just slightly, I want as close to what's really happening right there as I can possibly get. Well, I'd have a couple of choices here with regards to sticking with this kind of a format. One is I could reduce the tick size, right? So I could go from a 2000 to, say, a 512. That's going to give me way more swing structure and more insight, and I might consider doing that, right? Or if I had the screen real estate, or even if I didn't, I could just split my screen. So I might have a 15-minute over here, a 2000 tick, and a 512 over here. So I can see that internal structure here that might be advantageous. So by reducing the tick size, I might get some more insight. The other option that you would have is to use another one of our indicators, which we designed just for this purpose, to get as close to replicating what you see in that footprint chart as I can on a candlestick chart. So if I go over one here, you'll note now that I've switched to hollow candles. So it's the exact same setup, other than I'm now using, I'm color coding the outsides of the hollow candles, and I'm deliberately choosing hollow candles because I'm now putting information inside the candle, right? So let me bring you over here so you understand what we're looking at. This is the part of our graphical order flow package, but you can buy this indicator individually, right? So it's the order flow buy sell momentum. It retails at $245, but here you can trial it for $49, right, on the Lease, right, on the Lease program. I would encourage you to read through here. I would encourage you to understand what it's showing you here, right? And then there's a video down here somewhere, I'm pretty sure. I've got a video down here. Oh, pardon me, it's on the graphical order flow package. So we'll do a little combo here of, you'll understand that it's not complicated to understand here, but oh God. Get it up here. I thought I had a video on that page, but it's on the graphical order flow under the packages here, where we walk through what's actually involved there. But this is relatively self-explanatory. So let me come back here, but just to, again, in the context of trying to put together a template here, if you're a tick chart trader, this can only add value. So what am I seeing here? Well, it's a couple of things here. I'm just going to go over it very briefly here. But the highlighting of the outside of the bar, when that thickens, that's showing me that 70% of the volume was in the bottom or top third of the bar, right? So the idea being, if sellers are accumulating and getting aggressive at the bottom of the bar, it's likely to continue. The arrows are giving me it's a kind of a proxy for the intra-bar delta. It's the speed of the volume based on the last X number of bars, right? So I think our default here is set to 5 bars. So the speed of the volume, if it's 1 or 2 standard deviations, 3 arrows would be 2 standard deviations, and 2 would be 1 standard deviation. So it's showing me who's the aggressor. So I'm getting kind of a proxy for, here, let's bring this down here so you can kind of see that. All right, so I'm getting a proxy for a footprint chart. So I can see the delta start to accelerate in these 3 bars here. So you see it's speed. I get high speed selling here. So that would be that would be this bar here. So I get an imbalance on the end of it here. The delta is 216. I've gone from 416 at the top of it. Now I go to 510 on the next bar. Right. So sellers are very much in control here as we're driving it down. So if I can't see this, well, at least I want to see this, so I can get a little more insight into what's happening intra-bar. Who's in control here? Well, so here's a good example. I might have thought, oh, look at sellers come in here, but oh, all of a sudden, we hit the McGinley River, and all of a sudden I've got aggressive buying. Here they are following through to take it back up here. Now here come the aggressive sellers, right? And they stay in control all the way down. Here I get a little bit of a squiggle here, but eventually now we come back to the McGinley. Right now, before we're just looking at it. Over here, we're going, oh, hey, we came back to the McGinley. Oh, and then I get a down candle. But I mean, see, this is the trade-off with a tick size this big. That's a $325 bar, right? It's a 26 tick bar. Right, so if you're trading like I typically will with a 12 or a 16 tick stop, I mean you can get stopped out intra-bar here, and the thing continues on, right? So you've got to be mindful of the trade-off when you're going to a bigger size like a 2,000 tick, is that the intra-bar you can get stopped out. Let's go back here, and now I look at this and say, okay, well, if I'm going to go short here, at least I want to see, right? So I've come into it with a big up bar here because this is going to lag, so you're not going to see the selling come in quite as quickly here. See if I can get it over on the footprint chart. What time is that? That is 14:17. Oh, hang on a sec. Okay, let's bring this down. All right, so here's 14:17 right here. So here's the up bar, right? So here this is this candle, here's this candle. Now look, all of this starts to come off of it here. I get a stacked imbalance. So delta negative. I pause here, little pause candle, then more down with stacked imbalances. Right, as you can see here, so they're on top of each other at this price point in the DOM. Right, you've got sellers, right? You got absolutely no buyers to take the other side of it, so down we go until we get to that pivot. So I'm kind of going through that, so you see the advantage. If you don't want to be looking at a footprint chart or don't have the real estate or the budget for it, this is an alternative way to get insight into that order flow, recognizing there's going to be a lag down here, but getting as close as we can to a footprint chart and the speed of and the aggression of sellers or buyers as we come out of an important pivot like that. So if you're looking here going, oh, do I sell it here? Do I sell it here? Well, as we get, note here, we'll look at it this way. As we get this big down candle here, I'm still green in the WADA. Right, it hasn't rolled over yet. Now in this bar here, I get my first red. Now here, note the TDI has just gone red. I haven't crossed the signal line till right here. So right here, now I've left, right, that's the trade-off. So from the center line of the McGinley until I get right here, I've left 33 ticks on the table. Is there a way around that? Well, I don't know that there is. Right, there may not be, right? So it's even the most aggressive. If you're looking for a little bit of confirmation, I suppose the best case scenario would have been to sell the low of this bar, right? Sell that break. If you did that with a 16 tick stop, let's see if we could pull that off. If you sold the break there, looks like you could with 16 ticks. There's 16 ticks there. So if I sold the enter, and let's assume a little slippage, right? So maybe we got a tick or two of slippage. So if I had a stop limit, or pardon me, if I had a stop limit, I'm not gonna. I mean, I could fill, but I'm not going to have any slippage. But if I were stopped into the market there, let's assume a tick or two of slippage, and then I'm coming down here with that as my target for the low. That's the low. So there's a 423, 34 ticks, right? The target is the prior low. Pushed it here. Now, what I want you to see here is that if you're entering on that bar, you still have a green bar here. The TDI has not rolled over yet. So this is what I'm trying to get you to. If you're going to use our back tester here and put together kind of a proxy for your criteria for when you're entering, you got to be honest with yourself, and you got to be disciplined about not making yourself look better based on not wanting to see negative results here. So would you take that trade? Well, then you have to be able to say why. Well, I'd take it because of the pivot here of the location and the acceleration of the delta. Okay, is that enough, or do you need to wait for a red bar on the water? Do you need to wait for red in the RSI? Do you need to wait for the RSI to cross the signal line? Do you want to see red in the cumulative delta? Right? It's easy for us after the fact, right? It's easy for me, right? It's easy for me to say, well, here's the perfect sell. What I'm trying to get you to is what is your criteria to take that trade? There needs to be a very specific criteria so that you can go through the process of back testing yourself. Because if you don't, you're going to always give yourself more credit than you should, right? It's just human nature. We're going to say, oh well, yeah, of course I would have sold that. Of course I would, after the fact, right? But right there, are you selling that? Right? Are you selling it right there? Look down below. Are you selling it? Well, if you are, you need to be able to explain why. What is the criteria, and what's the checklist to allow it? Is it, oh well, I've had a fall off here in the WADA, right? So it would suggest that there's less buyer's enthusiasm. Is it the hook in the RSI? Is it the two candles in the cum delta? Would that do it, right? If that does it for you, well then every time you see that, well then there should be a trade there for you, assuming you're in the right location here. So location is critical, right? So we obviously, right? So the fact that you're even considering the sell is the location, the retrace back to the 55, to the McGinley. That's the reason you'd even be thinking of it. Well, in addition to the fact that we've been in a screaming downtrend all day. So swing retrace, I'm at a 50. Or pardon me, I'm not quite to a 50, as I recall. We're not quite to a 50 here. But you're at the 55 McGinley. Now, is that the condition? So every other time that we get in that condition, that's got to be a trade. It can't be, well, this one worked out, right? So, but oh, that one I wouldn't have taken. Right? I mean, is that not almost the exact same thing right there? It is, actually. It's right. So here's the bar. Here's the fall off in the McGinley. In this circumstance, oh, let's see if we go right here. I'm still green on the RSI. I've got two red down bars in the cumulative delta. Okay, are you selling that? Is that the condition, right? Location. I've got location. I have a fall off in the WADA. I'm hooking here, but I haven't crossed yet. Next bar. Okay, now I'm red here. I've crossed. Now this is there's the ideal sell here. If you're selling close to the 50, we've come outside of the Bollinger Bands. We've gone red, and we've crossed the signal line. Right. So what was there? You only made it to the center line, but for a day trader, let's assume a lousy fill, still 26 ticks, 325, and all you did was make it to the lower ATR band. Right, you hit the center line. That's a 34 period in the center line of our TDI. Well, you can set it to whatever you like. The default is the 34. So I've hit the center line. Now, but look here, all of a sudden, the cum delta, I can see buyers are coming back in. Right, here they go. Right, here they go. Here's buyers. Right, there's sellers. Right, this time we get through. Right, so right here. You selling here? Well, now we've got rising WADA. We've got rising RSI. I've got cum delta rising. Are you selling here? Probably not. Right? Are you selling here? You got to the supply zone. I'm just trying to get you through this process so that you can start tracking yourself, and you want to be hard on yourself, not easy on yourself. So let me here, I'm going to finish up with a couple of things here. The other choice here, let's come back to this pivot, because these two are this is just great examples of what I think we all deal with here. So one of the things we talked about before is I could move off of a 2000, I could go to a 512. So here's that same section. Is that it? Yeah, that's 335, 36, right? Yeah. So here it is, right? So here's the same section on a 512. So you might have as I said before, maybe you got a 15, a 2000, and a 512 over here. Well, so you're going to have different swing structure on the 512 because it's a 512, right? So if I turn the supply demand zones on here, let's see, I'd have to do market replay here, and market replay is so cumbersome in Ninja that No, I even attempted to do this video. The market replay was so slow. I just bailed on it. Oh, let's see. So, okay. So a couple of things to note here, and this is an easy mistake to make. Well, let me do it this way. So let me reset here on a 512 here. God, I'm going long. Ugh. Okay. So if you're looking at if you brought this chart up right here, right? What do you have any sense of context in the day? You might look like, wow, what a ripping uptrend I've got. Well, that's absolutely true. This is a ripping uptrend. The trend says down here, but I've had break of structure, break of structure, break of structure here. This is a full-blown uptrend. Break of structure, retrace. Break of structure, retrace. Break of structure, right? So in Elliott context, I've got an impulse. Oh, shit, did I overlap there? Oh, well, let's just call it a 5. I think I did. Overlap there. Yeah, I did. But swing, retrace, swing, retrace, swing, retrace. Right? So I've got an uptrend on a 512. Is the day an uptrend? Right? It's very easy to get lost if you're hyper focused on a small time frame or a tick chart like this and lose context. Right? So all the more why you need to have a 2000 or a 15 or a 5 something or a 4000 tick, something to keep some perspective so you don't get lost thinking, wow, this thing has really turned around. This is a raging uptrend. And don't misunderstand me. At this degree, that is a raging uptrend. I mean, what did we do there, right? I think I just measured this here. We did that's 100 ticks, right? We did 100 ticks of a rally on on a massive down day. So they're going to come. We're going to get these counter trend rallies here, but in the context of the day, right? When we get up to this point here, this is the point we were just looking at, saying, "Oh, is this? Do I want to be a seller here?" Well, let's go back here to the 512. Oh shit, where to go here? 512. Well, what can I see here now? If I get up to that same pivot here, do I want to be a buyer or a seller up here? Well, if I'm right up here, a couple of things, like, obviously, right? So we're pushing outside of 4 ATR, but we did the same thing here. Now on a 512, it's going to be easier to push out. In fact, this I might even switch. If I saw a lot of pushing outside of 4, I might go to, as I just was saying, I might switch it to a 5-4 from a 3-4. But this isn't too far, right? So I know if I'm getting out of here, and I can look back and say, okay, well, even in this raging downtrend, we're not getting too far beyond 4 ATR, and we do seem to be. Well, here it is again, right? We're coming back to the 55 retrace. Now what are we doing? Now it becomes the support up. Now we pause down, pause up, back to it, back to it, back to it, right? Back to it, back to it, back to it. Breaks it, retrace, right? I mean, I would not want to trade without my 55 McGinley River, right? And I like having the ATR bands as well, just so I get that sense of, boy, are we pushing too far here? Right? The market will tend to want to revert to the mean, right? Where's the mean? Center line, right? The McGinley is in the way I have it set here. So we come back to this location here, and you say, let's assume you missed it for whatever reason. You're like, no, I didn't. The market looked like it was going to start rally. We're heading back towards the IB. I thought maybe that we're going to get a trend change. For whatever reason, you missed it, or you didn't take it, or you took it and you got stopped out. For whatever reason here, now you're waiting. Where's the next setup? Where's the next setup? Well, as we're coming down here, as we start to accelerate down through this, well, all of a sudden we're starting to break structure. So we're on this smaller degree. We've gone from uptrend. Now here we start downtrend. Here's one break of structure, two breaks of structure. So as we are breaking structure, we're leaving behind those supply zones. So now this is not uncommon in a strong trend like this. We're going to hover around the lower edges of these bands, right? Because the market, I mean, this is again a pretty extreme down day. So we're hovering, we push back in, but we're not making it to the center line. That's a good visual representation of how strong the trend is. I can't get back to the 55 McGinley. I can't get back to the center. Now all of a sudden, when I do get back to the center, look at this. This is telling. This is the kind of stuff. Hopefully, you get to the point where your brain almost subconsciously recognizes it. Here, every one of these retraces, I couldn't get to the middle, and I finally get to the middle. Now what happens? I don't get a new low. Right? Change of character. In this case, I get a change of character and a break of structure. So now on this small little micro degree here, I've got an uptrend. I've got two breaks of structure. Uptrend right here. 416. Now, you should look at what you see right there. Now, a couple of things should register. Number one, so I have the supply zone set to wick only, right? And if you don't understand that, right, you're gonna have to go watch those two videos to understand. Because if because I can, it's always what it's doing is marking where they are. So if I wanted to draw them, I could, but in this case, I don't need to. So in this case here, the actual order block or demand or supply zone in this case. Oh, whoops, the wrong tool. We've got a little order block tool in the toolbar. So if I pull this over, well, there's the order block. But I've got another one right here, and it's just off of that wick. So if I draw this one here, oh, the actual full order block is right here. If I draw it, right, I would use all the way up to that pivot. So here I've drawn them, but if I'm using just wicks only, I still got it on wicks only. So I'm coming all the way up here. Now note, I'm coming up here in an uptrend into a supply zone. Now where else, what else is there? We see that we've got we're in the pocket between the 3 and the 4 ATR. I don't know if I have I don't have much. Okay, I was just checking to see if I had the measured moves on here because I just put this together for demonstration. So one break of structure, two. I've had 3 breaks of structure. I've come right up. I'm in the pocket between the 3 and the 4 ATR. I'm at a prior pivot here at a supply zone. Now that's what is that, 417? If I come over at 417 to the 2000, oh, hang on, 417 is right here, right? So this is the pivot we've been talking about. So 417, I'm right here, right? So let's go back to the 512, right? 417, I'm right here. Are you selling it here? Well, let's look below. Right, you know where you are, right? You've just tagged the supply zone at between 3 and 4 ATR. Now look below here. Right, so a couple of things here. I'm waffling. I get an inside bar here. Often you'll find that these zones there'll be an inside bar very close to them. Note the white here, inside bar. White here, inside bar. White here, inside bar. Right, it's just a little bit of a tell. Here's another inside bar. It's a little bit of a tell, right? So there's a loss of momentum and indecision, right? So we can't even break the range of the prior bar. Okay, so I'm here, here, here. Now what happens right here? Well, I've a couple things. So I get 5 candles down here, so the sellers take charge. I see that I've got 2. Well, let me open it up. I've got 2 arrows here, so I know the speed of the selling. We've gone past 1 standard deviation, so aggressive selling. I can see the aggressive selling in the QM delta. Now look up here. Remember, the absolute best signal from the TDI is when we get outside of the Bollinger Bands and above the 68 or below the 32. Right, so you get up, out, and if we can cross the signal line as close to that range there as possible, that's the, of all the signals the TDI gives, that's the primo. That's the best one right there. Right there, as we're crossing the signal line at the 58 after coming just outside. Well, here we got outside here, and then just barely outside there. That is a. Now, if you wanted to, you're not sure, like, well, wait a minute. Okay, so now look below. Right, I've still got a green bar. I've still got a green bar in the WADA, but it's below the threshold, so it's really insignificant. I'm not even to the threshold line. The trending line is black, so I have no trend here, obviously. Next bar, massive increase in the. So I know sellers are coming in. I get a big red bar. Now I'm well past the signal line on the TDI, and I've got now continuing weakness, right? Aggressive selling in the QM delta. So from here to here, where's the target, right? This is, oh, let's assume, oh, you didn't get a great fill, but right there, the first target would be the prior pivot. Now, it's not as much right here because I've got a smaller range because I'm on a 512, but that first target is 22 ticks, right? Not a bad scalp. Now, here, do you get out here? Do you get out here? Well, I would, if I'm in a 2 lot, well, 1's out, right? Now my second, or if I'm doing a 3 lot, and 2 are out and one's trailing. Well, at this point, at 21 ticks, I'm at scratch, right? The ATM has moved my stop to scratch. So now there's no pressure to get out. Even though I get a green bar here, I can see the sellers are still, right? I get red bar in the delta, and I get 2 down arrows here. So we're now, what are we doing, right? We're consolidating around the 55 McGinley. Now here's the first sign of, oh, wait a minute, now it looks like sellers could be starting to take control. red Wada Atar, no trend yet, but I'm red here. I'm red RSI. I've got two arrows inside the bar, and cum delta is red. Are you selling here? Said differently, are you selling here? I can't answer that for you, right? But what my point is, you've got to be able to say, are you selling there or not? And if you are selling there, it's got to be because of this, and this. Is it, okay, I need to see a minimum of two candles here to see sellers being aggressive. I need to see a red cum delta bar. I need to see the RSI red, and I need to see a red in the WADA if you're using this template. Is that enough? Are you selling? Looks like it was a good trade. You're selling right here. So I'm trying to get you to. What is the criteria for you to make that sale? Now, and you come down here. Are you buying here? Probably not, right? We're coming in, well, it's 2 o'clock on a Friday. Let's push this back up here and see if there's anything else we can glean from this that might be useful. Well, I mean, again, I can show it to you, but you're gonna have to see it for yourself. So we come to the 55 McGinley, back to the 55 McGinley, back to the 55 McGinley. All right, we just keep doing it over and over again. Here we go. All right, we're back. Now we come back to the McGinley again. All right, it's not until the end of the day, right? We get above it again. Here's a little consolidation. This would be a false break, right? It looked like you were going to break here. They faked you out there. Looks like that would be a measured move, right? If I just draw it up here, let's just pull this one. Textbook measured move, swing to a 50. Let's look at it. All right, are you buying here? I'd probably not be buying there. The trend's been down so hard. I'm just looking for more sells. But is there a trade there? Yeah, it's not a bad trade. Well, now are you a buyer right here? Well, I've got no insight other than the outside of the bar. So I know the bulk of the buying was in the top third of that bar. Then I get 2 candles here. Then I get another good solid green bar here. I'm going towards target. So all this is an algorithm getting its target. That's all that's happening. So when you're right here, are you buying? Well, look at the RSI. I'd be reluctant to be buying there, even here, because I'm not. I'd rather be buying it under the way down here. But if I were gonna be a buyer here, I need more. There needs to be more. Are you selling it up here? Why would you even be thinking of selling it here? Now, take note here that an algo target is not a sell signal. It just means that this algorithm got its target. Right? That's all that's happening here. A piece of software got its target. Now we get a reaction. But because I break this pivot here, on the next retrace, this might be an area of interest. Now, take note here. This is off of the wick structure here. So I'm getting sidetracked here, but you've got to watch those videos here. So the actual zone is right here. I would include all of that because this is all the up before the down. So this is an up candle, but then the wick of this candle is still more up. So if I'm drawing the zone, I want to include all of that up. So as I make the retrace here, what happens, right? So I get on the other side of the McGinley. I come back to it here. Little pivot. Now I'm in again. Now, do I want to be a seller right here? Well, if I was hesitating right there, this might give me some encouragement. I've just tagged the supply zone here, the full supply zone here. Again, I have it just set on wicks, but I can draw it in so I can see I've tagged it there. Here's the change of character. So if you were ultra conservative as we're coming down, there's the first break of the last low that gave me high. So I get a change of character here. Now I'm back into the McGinley. Now look at all the arrows. Boom, 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 all the way down. Where do I stop here before I get my green candle? 4 times the ATR after I broke structure. So where would the trade have been? Right, this would have been a nice place for a trade. Let's let me open this up here and let's just look at it. Right here. Okay, so you're coming right, so maybe coming right here. Well, look at the RSI. Right, RSI is now under the signal line, under the 50 and accelerating down. I've got a big red bar in the WADA. I've got red in the cumulative delta. I've got 2 arrows firing here telling me sellers are aggressive and they're coming in fast. I've just pinged the McGinley after pinging a supply zone here. So if you didn't get it here, you got another chance there, and there's probably another measured move right there. All right, if I pull it up. Right to the golden zone, right? So here I get another little measured move, little micro measured move here. Now are you a seller right here? Maybe right here. Right, it looks better here. So I've gone from orange, neutral to red, hard red, red, acceleration, right, all the way down. So where's the target? Oh, here, let me get that thing off, and then we're going to wrap this up because I tend to go way too long. Oh, let's assume for 16 ticks. Let's assume your entry is middle of that bar, and let's go back. There's, oh, we got plenty of room on a 512. There's 16 ticks right there. Okay, so on a 512, I can give that a little more room visually here on the assumption here I got stopped into the market. So, I will commonly do it this way. If I have a low here, I want to get stopped in on the break of that low. So my target would have been first target would have been that low. Right here, here's the last low at that moment in time. That's the low of the day, right? So that would have been the target. So what we got there, 248, and you don't even have to do that much. All right, I'd have been just a few ticks on the other side of the golden zone, with that is the target. So in actual fact, that's a little over about 1 3/4 to 1 at first target. Do you have to get out here? Well, if you're a scalper and you maybe you got one and you got one out or two out, and you've got another that you can leave to run. Is there any reason to get out right here just because you've hit the first target? Any reason down here? I don't see anything telling me, whoa, you better get out. Other than I've just hit the low of the day, right? That time that was the low of the day. Little reaction as it hits the low, right? Then right, we just carry on. And then, let's see here. Another little counter swing uptrend. God, I got to wrap this up. We're going too long here. Here's that little swing structure we talked about. And look how, we'll wrap it up here. Look how good this is, right? So this is the kind of thing, right? I know it's tedious, it's time consuming. You got to do it. You can do it in playback. You can do it with our, I'll show that in the last video here. You can do it with what I have on here, which is our manual back tester. So you can keep track of it. Here. So for example here. So here's a nice example here. Look what we're doing, right? So we've had breaks of structure on both sides. Now granted, you're going to get a lot of breaks of structure on a 512 because it's such a small tick size. But don't lose track of where you are looking here. Where's the trend? What's going on today, right? If you just open this up, where are you? Very easy to do, lose perspective. So you got to be able to quickly glance over and see something at a higher time frame or a higher tick size to know that you're just what's really happening right here. This is just a big range, right, within a 512, right? That's all that's happening here. And notice how the ATR bands are containing it, right? We're going from 3 ATR, center, 3, between 3 and 4, down to 3 and 4, 3 and 4. We're just in a big range, right? So this actually can be quite good trading. So as we get this break of structure here, it leaves behind this supply zone. Well, lo and behold, where do we come? Right back to the supply zone. Now, you could have taken it a couple of places, right? You certainly had one here, right? That's 21 ticks, a couple hundred. Comes right back to it. Take it again, right? So look and say, why would you not take it again? Let's open this up and look at it here, and then I got to wrap this up. You guys probably left hours ago. Okay, so swing, reach. We're coming right back into the supply zone in between 3 and 4 ATR. Okay, look down below. Okay, do I want to sell this here? Or do I want to sell it here? Well, I got a big up bar here, right, to get me there. And then I've got I do not sell when the RSI is green, right? Personally, right? I'm going to wait for that to get red. Now it gets red on this bar. I got a red WADA. I got a red WADA bar here. I'm red here. Center line is red. RSI has crossed the signal line. I got a kind of a neutral, slight uptick in the green, so essentially it's meaningless to me. So I don't get any follow through. So if I were selling right here, well, let's just do it. Let's put it together. So you were using here. Let me get them. We'll go ahead and I'll show this. All right. So I've just hit the hotkey. Where was I here? So we've had it once here, and let's assume we're going to sell here, and let's assume we don't get a great fill. So oops. I'll do it again here. Hang on. Shift F11. Let's do it this way. And the target would have been this target down here. Oops. So I got a 16 tick stop. Do I need to use 16 here? No, I really don't. Could have done it with 7. Now, right, am I threatened here? Yeah, if anything, right, that might have been a place to add based on what happens here. If nothing else, this would have been the place to add, right? So why? Why would that have been the place to add? That's why. Right, I'm retracing here. I know there's going to be an algorithm there. I've already picked up, oh, what do we got here? I've already picked up here from tapping this supply zone, even though I had a little kickback here, right? It didn't threaten my stop. So my entry right here, oh God, well here I've already at 585, but just to the first pivot, there was 18 ticks. Now it did just what you'd hope, right? Retrace to a golden zone, or just shy of a golden zone, front run on the golden zone, then it goes again, gets its target right here. So this is what the manual let's look at that for a second, because I'm going to go over that in more detail on the 4th video. So what this is going to do is it's going to keep track of all of your trades. You're entering them manually based on the criteria, right? So all through this entire series, I keep referencing there's got to be a criteria, a mental checklist that you are consistent with when you're entering the market. So what we want to do with the manual backtester is go through these and say, okay, would I take that trade? And if I would, why? And what's my result? Because if I'm going to take it here, I got to take it here, right? You got to be careful about the hindsight trading, which is why there has to be a very specific criteria for you to take the trade. Otherwise, you're gonna do yourself a disservice, because you're going to say, well, no, I wouldn't have taken that one, right? Because that would have been stopped out. No, but I would have taken that one. You got to be careful of that, right? So it's got to be the criteria has to be the same. So you can say, oh, I took this one at winner, I took that, or I took this one and got stopped out, loser. And you've got to account for those and then look at that over you got to do this for a couple of weeks. You know, to have it be meaningful, say, okay, is my approach, if I'm doing this a week at a time, I know it can be tedious to do it depending on how many trades you typically will do in a day. But that's how you improve, right? And that's how you make a determination as to whether or not this is a combination that's good for you, that's a good fit for your style of trading. And let me just finish up here by showing you that. Oh God, I should have had this teed up here. But if I go to, this is a really, really powerful indicator, and very few people are willing to do this. Oh God, I gotta find it now. Hang on. Oh, here we go. Manual back tester. Okay, so for $39.80, you can lease this for a month and determine whether or not your approach to the market, the criteria that you're using for entry, is a winner over time. Right, you can watch the video here. My partner did that video here, and we can just see how to use it, and it'll keep track of all of your trades. Right, you set the stop level. You can change the stop level. You don't. It doesn't. It's just okay. Would I have taken this trade? Would I have taken this trade? Winner, loser. How's my trading going to be at the end of the week? Right, you can do it 1 week at a time. Very worthwhile. So to be able to lease that and say, well, rather than spend $200, I'm going to spend $40. Try it for a week and see if this combination is a good fit for me. Right, that's what we're trying to do. All right, so let me wrap here because I'm going way too long. As I tend to do, but hopefully you get some nuggets out of this and some things that might help you in terms of putting it together a package. 2, if you're a tick chart trader, appreciating some of the pros and cons of it, right? And the con being that I can't see inside. If I want to solve that problem, then I'm going to use the buy-sell momentum and say, oh, okay, well that's going to help me. And if I have the skill set or the interest in it and I want to do it differently, then if I want to really see what's happening in that candle, then I'm going to go over to a footprint chart, which is the same thing. You can lease for 30 days and see, hey, is this helping me or not? Right? It would be worth at least watching it, right, for the price of leasing it, to say, is that going to help me? I kind of always been thinking about, looking at footprint charts, but I didn't want to spend the money. Well, now you can do it without having to make that big investment, and then at the end of it saying, well, shit, that didn't help me. Well, I just flushed $250 on that. This way, oh, okay, I can try it. Does it work for me? Oh, it does. Here, look at my results. Because I'm consistent and I'm disciplined about when I would enter and when I would exit, and I accept the stops when they come, right? Because in reality, they're going to come. It's just part of the game. Okay, guys, I'm going to wrap there. This will be, I went way too long on this one. We'll wrap up here, and then I will be back. I know many members are asking for it, looking at combinations with time-based charts. But I wanted our tick chart customers to not feel neglected. Okay, there you go. I'm going to wrap up here, and probably won't get it today, but this week we'll have the fourth one coming, and I'll go through combinations for minute-based charts. Okay, guys, talk to you later.